Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 4th of February. Starting off with the FTSE 100, and here it looks as though we've got near-term support around 85.20, and above that still looking for 87.20. Obviously, the dust settling after the Trump tariffs bluff, which most countries seem to have fallen for, apart from China, which may have been actually the most important one of the lot, but still unfolding. Below 85.20, then there's the risk of the old May resistance, rather, 84.74. But as long as we're above that, then still looking for a move to 87.20. On to the DAX, and here, obviously, the EU rather more affected than the UK, partly because I suppose it's got a little bit more trade than we do. But here we gapped down yesterday. We've found resistance at the floor of the gap there, 21,500. Below that, there's the risk of a move down to 20,800, which is the floor of that rising October trend channel. But given the momentous tariff news, one can actually argue that we haven't actually fallen back that far at the moment. On to the Dow, and here the market managed to recover after the extension on the tariff dates for especially Canada. But here you can see we had the fear that we would head down towards the 50-day moving average there, 43,700. Managed to bounce above that, so it's a bit of a bear trap rebound from below 44,000, which is positive, but still the 50-day line, the natural support here, might still see that, and early and end of day close through 45,000 really opens up the top of that rising trend channel from March last year. 46,400 maybe by the end of next month. Moving on to Bitcoin, which rather illogically decided to react with the Trump news. It became a sort of risk-off situation. Interestingly, we bounced, or we actually headed down to that all-important November uptrend line. That's currently at 93,700, and we were looking for that line as a dip to buy into if we ever went down towards it. And in fact, we did. We overshot it slightly as well. But 93,000 became the support yesterday, and we bounced back quite well above the 50-day line there, 99,000, looking for another test of the best levels up to 110,000, although maybe a little early to assume the worst is over there. Moving along to gold, and gold, I suppose, should be the best market in this current environment, and I suppose so far it has been. Here we bounced off 2,800, the old October high, and we have been looking for 2970 by the end of this month, and in fact, even though that was rather perhaps a rash time frame, it looks like we could actually do it, and that's certainly possible while we're above 2,800. Moving on to the stocks, and not that many of them, in fact. We're looking at ARC Minerals for the 100th time as a potential recovery situation. We've had bull traps all the way down, for instance, January last year, May, August, and then October, November. So let's hope that the rally to the 200-day line, which is currently at 1.6 pence, is not another false dawn. If we can stay above the 200-day line, or at least recent support at 1.5 pence, looking for 2.4 pence as an initial target, even if we fail after that. The positive here, I suppose, is the way that the 50-day line is now rising quite well, and that can be a decent signal, as is the way that the RSI has rebounded above neutral 50 on 2 or 3 times in the recent past. A stock that I've covered quite a few times in the recent past has been Altyn. Here, actually, we've had a great start to 2025 with the break of the November resistance, first at 220, and then major neckline resistance at 247. Our target is as high as £3.20, which we're looking for well before the end of this month, while we remain above the old peak at £2.79 from October. On to Celadon, where it's always we're sort of on a knife edge in terms of the company's funding news. I suppose the company makes it even more of a knife edge than it should be or needs to be, but the current situation is that we had a hammer candle there down to the 12p zone back at the end of last week, and we've had a gap close by signal today, and we also have a rising 50-day line. So it actually does look as though we've got technical salvation, but that translates into fundamental or financial salvation is another matter. But still hoping that we could get up to as high as the 200-day moving average at the top of that broadening triangle base at 44 pence by the end of next month, which I think is also a date that the company's mentioned in its RNSs. Moving on to Empyrean, which against all the odds has kept on turning, or it's turned around and kept on turning around. We're above the initial January resistance there at 0.14, above that, looking for rather optimistic sounding 0.27 by the end of next month. But we've got a series of positive candles there, and also we've got the 50-day line rising well, so a couple of ticks there for the shares over and above the big tick, which is a RSI rebound above neutral 50, so that V-shaped bull flag resting on a rising 50-day line, giving Empyrean quite a good look at the moment, probably better than most are imagining. Onto Eurasia mining, which has hit the first of our targets there at 3.2 pence. Get a lot of flack whenever I say anything positive about the company, but 3.2 pence, the initial target there, the next target up to 4.5 pence, and maybe we get that by the end of this month rather, which would be the third anniversary of the Russia-Ukraine conflict, interestingly enough, and obviously Eurasia would be a major beneficiary if that was called, or that particular conflict actually finished any time soon. The view here, though, is above recent resistance at 3 pence, looking for 4.5 as soon as the end of this month. Moving on to Marula, which looks like it's trying to revive itself. It had a great run back in 2022 and is now trying to, 2022 and 2023, now trying to revive itself with the gap higher off a rising 50-day moving average above a recent neckline resistance at 5.3 pence, looking for as high as 9.5 pence by the end of this month. It looks as though something rather good is happening there. We also have a RSI 50 rebound to add to the bear trap gap reversal effect from below December support at 4.2 pence. On to Orosur, which had decent grades today and gapped up on the basis of that. We've had a bear trap, a gap reversal from below the 50-day line there at 6.4 pence. Above that, looking for 9.5 basically, which would retest the December resistance. And there's also a resistance line projection there from January last year. In fact, you can make it slightly higher than I have drawn it so far. There is a little line of resistance there from from last month, so you could argue that we're in a sort of triangle there, but above the 8 pence level, hopefully we'll keep on going. Moving on to the last two. The first one is Rome Resources, which I think has been treated rather harshly by the market, but here it looks as though we finally got a proper turnaround signal, at least the first one in quite a while, in the sense that we've had a bear trap rebound from below the September support there at 0.23. Above that, looking for at least 0.3. Which is the 200-day moving average, but the shares is oversold as they have been since they came to market at the end of July. So the RSI went down to 20, so there might be some bottom fishers on that one. Finishing off with Vast, and here the shares had a decent rally after the loan that came from the CEO, and it looks like they're bouncing again. A nice rebound off the 50-day line, a rising 50-day line near the low, and strong-looking candles there as well, especially on Friday. That suggests that we could actually break the 200-day line and stay above it. The target there, 0.2, while we have the trigger of a break of the 200-day moving average at 0.14. Ideally, there's no break back below that 50-day line from now ahead of a move to 0.2 pence. That's it from me today. More updates tomorrow.